What's good, everybody? It's Crypto Winter Bowl back with another video. I'm doing a video on the Ethereum merge. I'm just going through an article that pretty much explains everything that you need to know about the Ethereum merge, and I will also be doing the Hedron borrowing um, update as well at the end of the video. So to kick things off, let's take a look at the market first. It was a pretty good down day today. If you watched yesterday's video, um, I did a little bit of analysis on Bitcoin ETH. So basically, I saw that there's some resistance at this 111-day moving average. I said it looked like it was going to roll over. Um, and basically the CPI numbers today came out. They're fairly weak. And we did have a pretty major dump down in the market. We dropped about 12% in Bitcoin. So basically, our support level here is gonna be um, just under 20,000. So our next line of support is going to be like 18,600. So if we can hold that 18,600 level and find some good support there, things will be looking good. But obviously, I don't think that's going to happen. I think we're going to break 16 or 17.7 here and continue down and make some new lows for this bear market cycle. Let's look at Ethereum. So Ethereum looks like it's almost touching that 111-day moving average. Um, Once again, if we find support there, we could look to maybe retrace back up to around like 1790 or so. But I think the Ethereum merge news was a buy the rumor, sell the news. So now, since the merge is actually taking place, um, traders are more than likely. It looked like they decided to take some profits. Um, so if we can find support here, great. Um, but I mean, our next target here is looking like it's going to be around 1415 to about 1350. So if those levels hold, then we can look to retrace possibly back up to like where we are now. I still don't think that the dump in the markets is over. Um, I believe we'll still make new lows in Ethereum and Bitcoin, and some of the altcoins will continue to make lows over the next month and a half or so, going into the fourth quarter of this year. Um, so, you know, maybe if you're looking at starting to DCA in now, that wouldn't be a terrible idea. Um, just like with a small percentage of what you actually want to put in. But I mean, if you can hold through these down times without getting the urge to buy on every 10% drop, then waiting till we get down a little bit further, like to the 1250s or 1300s to start DCAing into ETH, that wouldn't be a bad play either. But this is not financial advice, so um, kind of evaluate it yourself. But I'm just reading these charts how I see the market unfolding. Um, so yeah, but market's down, so um, I kind of like it when the market's down. It kind of gives you some relief. I used to get all excited when we're in a bull market, like crazy excited. I didn't know what to do, but now it's kind of the opposite. Whenever the market's going down, I'm like, should I buy? Should I buy? Or what do I do? It's not never like I'm not selling ever now when the price is going down, but that's just kind of how your mindset changes once you start figuring these things out. So let's take a look at let's take a look at Hex real quick. So Hex, it did break this trend line dating back from June 17th. So we clearly broke this and we closed below on this candle here. So the further downside I'm looking for is anywhere from like 3.5 to this low here at 2.7. I mean, we might stop in between here, but like 3.1 cents. This could be the low, but if we don't hold 3.1 cents, then we're gonna test this 2.8 cent level here. Um, you know, good time to start buying down here. Like these are good DCA prices for Hex. If you buy in these levels, you're not going to be disappointed. Let's take a look at Hedron now. So yeah, Hedron, like I mentioned yesterday, we did break this trend line here, um, closed below, so there's definitely further downside. Um, what could possibly happen is we could kind of consolidate around here and maybe retrace back up to like 40 or 4,000 and just kind of ride this a bit before we make another move down. Um, but I really think that we are gonna get a retracement down to the 1600 level, to this 111-day moving average. If we don't hold this, then we're headed down to like 11, 1050 or so in these areas. Um, you know, Hedron's been on a tear, so it's kind of due for a good pullback. Currently, it's down 50%, so the 111 would be 75%, and then 10 10 would be like 80%. So like, 75, 80, 90% dips are in the game, so don't be surprised if it does come down here. Not expecting it to, but this is crypto, so volatility is the price you pay, obviously. Um, but yeah, so that's just kind of a quick little market overview. Um, so now let's get into the Ethereum merge. So if you're kind of new to crypto and you don't know what the Ethereum merge is, basically what's happening is Ethereum is shifting from proof of work to proof of stake. So you're not going to be able to mine it with ASICs or GPUs anymore. It's going to be you're pretty much going to stake your coins to get the yield. So Ethereum already has a proof of stake network called the Beacon Chain, but it's not used. It's just like a staging area for the ETH network to prepare for the proof of stake upgrade. So it's a consensus layer that works with the proof of work mainnet. So proof of stake and proof of work are different in how they decide who has the right to record the next block of transactions on the network. In the POW system, ETH miners compete to publish blocks by racing to solve cryptographic puzzles like Bitcoin. In the upcoming POS system, validators stake at least 32 ETH, so 50K market value right now, um, with the network and are randomly selected to create new blocks. The more Ether one stakes, the more likely it is to get selected. So basically, it's like proof of economic mass. So if you have more economic mass locked up in the system, you're more likely to get chosen to validate the block and get paid out the rewards. So the fees will not decrease after the merge. So this is not sharding. So they have been working on sharding for a long time, and this is not sharding. So fees will stay the same, um, And yeah, so kind of shitty, but that's what all these side chains are for. Um, there's like Polygon, Matic, Avalanche, Phantom. Those all those EVM chains have relatively cheap fees, but just the networks aren't as well known yet. So transaction speeds, they may increase from 13 to 14, and they might be 12. So nothing crazy on transaction speeds. Um, will the merge increase the price of Ether? This is kind of a variable according to this. Um, so Ethereum has 4 years positioned the merge as a massive upgrade to the network's core, along with addressing concerns about network's environmental impact. Proof of stake will introduce a new form of utility for Ethereum's native Ether token in the form of staking. So the merge will introduce changes to the rate at which Ether is issued and how it is distributed. These changes could be positive or negative depending on upon whom you ask. There's also a small risk, however, that the merge will fail, um, or that proof of stake will prove less secure than proof of work. Um, so from what I understand, once the merge happens, I don't know if I'm absolutely correct on this, but I don't think that any more ETH will be created. So you might have to fact check me on that. I kind of dug as deep as I could, and I couldn't see anything that that confirms or denies this. Um, from what I understand, it'll just be uh, the stakers will just get fees, and then a portion of those fees will get burnt. So it could actually be deflationary, right? Is proof of stake better than proof of work? This is a very controversial thing. Um, so according to ETH Foundation, POS will cut ETH energy use by around 99.9%. POS advocates also argue that proof of work mining centralizes control in the hands of who can afford to buy fancy mining crypto rigs called ASICs. So basically, they say that proof of work or proof of stake is gonna distribute the network a little bit more. But here's the but: if you have a lot of money, like big corporations like Coinbase, and like if you buy like $1 billion in ETH, right? Like you're gonna automatically have a lot of uh, control on the network. So when is the merge happening? So around September 15th. So this is basically decided by which block they pick. So the ETH core developers set the TTD at that's a big number. That's the block size, I believe, which will be released around September 14th or 15th. Can you become an ETH validator? So you need to stake 32 ETH um, to be a validator, and it will be impossible to withdraw until an update expected around 6 to 12 months after the merge. So this is kind of a thing too. Like if you're familiar with staked ETH, people pretty much stake their ETH in this protocol because they thought that the merge was going to happen like last year. It never did. So there's like $5 billion in ETH just sitting in this staked ETH token. So those will be unlocked soon. And then once you do stake your ETH, it'll be like 6 to 12 months until you can withdraw it after the update. So yeah, it'll get locked up for about 6 to 12 months after you stake it. So you will not need to take any action to get your new ETH. It'll just be automatic. So if you're holding it on an exchange or anything, um, it should be automatic. But if you just hold it in your MetaMask, it'll happen automatically. On an exchange, they gotta like update their nodes and stuff like that. So if you want taking it off the exchange would probably be a little bit better of an idea to have a flawless operation of your wallet and stuff like that. So there might be a proof of work fork. So somebody's pretty much just gonna fork ETH right away and continue proof of work so that miners can continue to mine. Um, Personally, I'm not too keen on this. If I get it, I'll probably just dump it right away. Can the merge fail? It could, but unlikely. So they have done a lot of testing on this, so I'm not worried at all that this merge will fail. But if it does, then you know, I guess that's software, right? So the nothing, you won't notice any change in the network. It'll be flawless and instantaneous after the final proof of work block is mined. So yeah, so ETH will continue um, developing the sharding and ETH 2.0. But that could be like years away, so fees won't get better for quite a while, which is okay because we have a lot of layer twos and stuff like that are kind of taking the load off. Pulse chain will be a big part in that, so I'm excited for that to launch. So yeah, this is kind of some data on the number of validators and stuff in the network right now. Um, but yeah, so that's pretty much the merge. So like I said, you don't have to do anything. Just hold ETH in your MetaMask or on an exchange, preferably transfer it off so you can take custody. But other than that, it's pretty straightforward. Um, Now this is another article I came across. So academic research claims ETH is superior store of value to Bitcoin. So this is really interesting because um, what other assets in the world are deflationary, right? Um, I can't really think of anything off the top of my head that is deflationary. So there's 118 million ETH in circulation. Um, the upgrade saw the network burn a portion of transaction fees and more than 1 million ETH. So if they're burning transaction fees and the circulating supply is kind of capped now that it's going to be proof of stake, then this is deflationary and Bitcoin is still inflationary. So um, and that's why a lot of people think that Ethereum will eventually flip Bitcoin because the market cap and will be much greater than Bitcoin, and also the fact that it's burning ETH um, through the use of Web3 applications. Right, Bitcoin really doesn't do anything other than just transfers, right? So there's really not anywhere near close to the amount of network activity on Bitcoin than there is on ETH. So it says here that it Ethereum's inflation rate is like 1% a year, and Bitcoin is 1.99. Now after the halving, that'll decrease to like it'll be about half, I believe. But still, it's yeah, Bitcoin is definitely not as useful as Ethereum when it comes to what its capabilities are. So they're saying here that ETH provides a better inflationary hedge than Bitcoin. Then therefore Ethereum may offer superior long-term store of value over Bitcoin. I like this one. They're they're calling ETH ultrasound money instead of hard or sound money. It's ultrasound. No, Michael Saylor just loves Bitcoin. He obviously doesn't understand why Ethereum is number two, and Bitcoin is just barely holding on to that number one spot. But I just thought this article was kind of interesting. So if you have any more information on like the merge or kind of this Ethereum versus Bitcoin dilemma, feel free to comment down below. I'm by no means an expert on this, but um, I can really see how this makes sense just because there's so much more transactions on ETH, and if they start burning some of the fees, then that's pretty bullish.